We're going to talk a little about Shopify today for Trade of the Day. And obviously, there was a lot to look for, and you're always shopping for good deals in the market and good price entry points. And I think that's the key thing here. I wanted to go over the level because I think when you have a good price level or a good price area, you can take it to your advantage sometimes in either direction, but you've got to be patient and wait for it to come around. So always going to the higher time frame here, just showing you nice strong move. Now, yesterday, you would have had multiple names that were just breaking out at the open and giving you fantastic trading opportunities off breakouts. In this particular case, you got a double bottom in the afternoon at 350. Now, you can go back a little bit further in your chart if you pull that 15-minute back or put up a 60-minute chart and see 350 had some significance otherwise. Not just a pretty round number, but also a double top in yesterday's trade. And then you came in today gapping into that range. Now, the only thing I cared about was that 350 number. Multi-day level on the higher time frame for a potential breakout at 350, but also overhead resistance for your old a 930 pop and fade type trade where you try to break out at the open and you look for the shorts. Now, obviously, at 930, you can see all it does is go down. So when you have a significant resistance level, and in a bear market, you like resistance levels because the market trend is generally to the downside, and it gives you these opportunities to get good shorts. However, there's no trade-off 350 here. You could simply get in at 42s if you want to at the open and give it $8. Not my cup of tea. I know the level I want. I'm willing to be patient, so I'm waiting. I'm not trying to fade this. I'm not trying to pick a bottom. I'm just looking for that 350 price. And keep in mind, they did get an upgrade as well, so there was a positive catalyst. Heads to the upside, there's two ways to get into a short like this. I generally prefer on a stock that might have a bigger spread to try to see it stall at that price level and get in on the way down. And I said this in the live show that the first time it came through, if I had just sat at 349, 349.25 and been on the offer as it traced up, I would have had that quick $5, $6 scalp trade, no problem. However, I did allow it to get up, turn off of that 350 level, and you can see I was trying to get 348s in here, couldn't get the fill, and then it came right down, giving you that winning trade. But I didn't chase the move, I didn't force the action. Eventually, it did give me that same price once again. It actually got a little bit better, got 349s because we got it the second time through, but instantly no good. And I think that's par for the course. If you chase that move, you could be shorting 346 and losing $4 and change instead of $1 and change. And that ultimately ends up making a difference. So do not chase previous missed opportunities. Just because you liked it before doesn't mean you have to sit there FOMOing it the entire time. Now, once it broke 350, it's about as clean as it gets. It actually never even threatens you again. The initial spike on the break gave you a pretty clean, like $1.50 or so right away. There was a chance for a reload, but the wick was pretty fast. So getting back in at 350, challenging. I had a 360 target on this. And what ends up happening is I'm going to show you this wick high at 357. And I probably should have managed to hold on to this. However, there was a situation where it broke 355, another even dollar, so 50s into those 55s. And you had a wick top where the bid on the level 2 essentially did not follow through past that 55 level. The offers are all the way to 56.5, almost to 57, and the bulk of the bids are sitting there 55.20, 55.50, and the spread's opening up without the bid following the price action to the upside. So when that happens, I see a wick off top and I just want to get out of the trade. Now it turns out there was a pullback indication that it could have fallen. However, it was so strong that not only did it break from that price, and this is why these liquidity vacuums matter, when it got back to that same level where it had the liquidity vacuum, guess what? It then holds the bid. And this is one of those things where when you're analyzing a trade, it's like, what can you do better? Well, if there was this price action that ended up in a pullback that was immediately bought up that got me out, maybe there's a little something there in terms of now finding buy support at that 355 range. Again, always trying to be better on a winning trade. That could have been a quick little reentry point through to that 60 level. Eventually, we did break down at 350. I would have thought we'd had a chance to hold this level, otherwise I'd be in it. However, it did come right back late in the day and be able to hold 350 after that little flush out. So it looks like they probably ran some stops and then held that 350 level. Good trades all day through that. About the only thing I would have done differently is look for that re-entry point off that 55. It was a reason to get out, and I think a valid one here, but then it showed you that that same price vacuum had buyers supporting it. Once you get that indication, you just go in there, 55.5, 56, risk about $1, play it into 360. Can always do better with these, but the level 350 was a pretty easy one to play off.